All right, let's talk about a brand literally everyone knows, Rolex. But we're not just going to talk about how fancy they are. No, we're diving into the pretty wild economics that make buying a Rolex less like a shopping trip and more like making a financial move. So let's get into it and see why this is so much more than just a watch. Okay, first things first, we just have to clear this up. There's this quote from the source material for this explainer that just nails it. People think Rolex is expensive because of branding. That's wrong. Yeah, that massive price tag, it's not just about the logo or some clever ads. It's rooted in something way more real and financially important. And this right here, this is the core idea. You buy almost any other luxury good, a fancy car, a designer bag, you name it, and boom, the second you own it, its value starts tanking. It's a liability. But a Rolex, it often does the total opposite. It acts like an asset.
So what does it actually mean for a watch to be an asset? Well, think about it like this. You know how a brand new car loses thousands of dollars in value the second you drive it off the lot? A Rolex has the potential to do the exact opposite. It doesn't just hold its value. In many cases, it actually goes up over time.
And the performance here is, honestly, it's pretty wild. We're not just talking about it holding steady. Certain models have historically appreciated so much that they've actually beaten traditional investments. We're talking savings accounts, gold, and sometimes even the stock market. That right there is what separates Rolex from pretty much every other luxury item you can think of.
Okay, so how does this happen? Is it just luck? No way. This brings us to our next big idea, the scarcity machine. This incredible value isn't an accident. Not at all. It's been engineered. Rolex has basically built a machine to create scarcity, and if you want to understand the money side of the brand, you've got to understand how this machine works. And this whole thing leads to a question I'm sure you've asked, or at least heard someone ask. Why is it so ridiculously hard to just walk into a store and buy a new one? You can have the cash, be ready to go, and they'll tell you there's a waiting list that's months, maybe even years long. So what's the deal? Well, the answer to that question, that's their entire business model.
It all boils down to this really simple but super powerful two-step plan. First, Rolex deliberately, intentionally limits how many watches they make. They absolutely refuse to flood the market. And second, well, that creates a situation where there are always more people who want one than there are watches available. It's economics 101, right? When something's desirable and it's rare, its value shoots up.
This engineered scarcity creates something else, a really cool concept called wearable liquidity. Now, what's that? Think about it. A Rolex isn't just something that holds its value. It's something you can turn back into cash fast. It's a globally recognized asset that you can convert in a pinch almost anywhere in the world with remarkable speed.
And this sell-it-anywhere test really drives the point home. Let's say you need cash, and you're in, I don't know, Tokyo or London or Dubai. You could probably sell your Rolex in a matter of hours, often for more than you paid for it. Now try doing that with your luxury car. You're looking at weeks, and you're definitely taking a loss. Designer clothes? Ha, maybe you'll sell them? Maybe. That's the power of that global recognition. That's liquidity.
But hey, it's not all just about supply and demand. The value of a Rolex is also built on something you can't really put a number on. This is where we get into trust and this idea of quiet wealth. These are the powerful, intangible things that drive its value. You see, Rolex built its brand on being consistent. They don't chase fads. The classic designs we know today, they were established decades ago and have only been refined, never totally replaced. A watch from 40 years ago still looks right at home today. And from a financial perspective, what does that consistency do? It lowers the risk for the buyer. And in the world of assets, lower risk means higher, more stable value. Simple as that.
This consistency also taps into a certain idea about wealth. You've got loud wealth on one side. That's all about flashy logos and trendy stuff that, let's be honest, goes out of style pretty quick. Then you have quiet wealth, and that's exactly what Rolex is. It's about timeless quality that lasts. It whispers. It doesn't need to scream.
And that whisper, it sends a very clear message. For people who really get money, a Rolex isn't just about showing off. It signals financial discipline. It signals a focus on long-term value. It says this person understands patience, stability, and how things grow over time.
Which brings us to the psychology of the owner. A Rolex isn't just a thing you wear. It's a mirror. It reflects a very specific mindset, a way of thinking that, funny enough, lines up perfectly with what it takes to be financially successful. And the key idea here is something called delayed gratification. It's pretty much the foundation of building wealth, right? It's that ability to say no to a quick, easy reward today so you can get a much bigger, better reward later on. And the whole process of even getting a Rolex basically forces you to practice this.
Think about it. You really can't impulse buy a new Rolex, even if you wanted to. The price, the scarcity, those infamous waiting lists, the whole system makes you plan, save, and wait. So the process itself naturally selects for people who already think long-term, which just reinforces the very mindset that helps build wealth to begin with.
Okay, so let's pull all these pieces together for the grand finale, the compounding of value. So how does scarcity, trust, and this specific mindset all mix together to create the ultimate financial payoff? How do you get an asset that actually grows in value all on its own?
Well, first, let's look at the problem. Every single year, the cash you have in the bank loses a little bit of its power. That's inflation. On average, you're losing about 2% of your purchasing power annually. So money that's just sitting there is actually losing value. The smart move is to find assets that protect you from this silent theft. And this is where an asset like a Rolex just shines. While your cash is slowly eroding, a Rolex has proven time and again to be a fantastic hedge against inflation. It has what we call pricing power, which means its value tends to go up, often keeping pace with or even beating inflation over the long haul.
So when you boil it all down, a Rolex is so much more than a watch. It's a physical representation of a whole way of thinking about money. It stands for a philosophy that's long-term, patient, calculated, and quiet. The exact traits that are the bedrock of lasting wealth. Which really leaves us with one final question to chew on. After looking at the economics, the scarcity, the psychology, you have to wonder, is this thing on your wrist really about telling you the time, or is it a tool for building your wealth? Something to think about. Thanks for tuning in.